Investor confidence has taken a knock, with worries about the economic prospects globally taking centre stage. Roberto Falzoni joins me in the studio now to share his insights. Roberto, welcome back to the studio.
Nice to be here again, Monica.
Lovely to see you. Now, if we look at the markets, Roberto, a rally in the major equity markets really highlighted some concerns about the strength of this US dollar that we're seeing. But which currencies, to your mind, face the biggest risk to this US dollar new bull run?
You know, as we correctly predicted a few months ago back in the studio, dollar strength right now is a reality. The dollar has been strengthening all over the summer, especially against the euro. Euro has been probably the weakest currency. Other currencies I expect to weaken against the dollar are Latin American currencies. Here you can see Brazilian real made a new high, dollar against the Brazilian real at 250. Now we have a little bit of pause, but afterward we will continue to go higher. I think another very interesting chart is about dollar against Mexican peso. Crude oil has been very weak lately. We lost almost or more than 20% in the last 3 months. This is going to affect the oil currencies. And I think that Mexican peso is one of the first candidates in Latin America to weaken. So we expect that to go to test 1375, 1380, and probably break above that and then continue and maybe go back to 15 next year against the dollar.
Now, that being said, to tease out that subject a little bit more, the rally was really quite short-lived. We had, as you mentioned, really disappointing data from the Eurozone and beyond. We also had the IMF playing their part and having a very negative outlook, and then the Ebola situation, lingers on as well. So what was your take on the subsequent slump in the equity markets?
I think that this is a welcome correction in the equity market. We've been rising and rising for the last, let's say, 2.5 years. And so, I would take this more as a correction. Of course, it's going to be a correction, painful correction. So not the 2-3% where all the traders were getting in and buying again. So here expecting between 10 and 15% correction. But this, will not change the overall trend in the equity market, which I expect to resume, by the end of the year.
Okay, now continuing on that subject as well, last week more disappointment for Europe with the Mario Draghi seemingly backtracking and then step forwarding again. What do you make of the suggestion that the Fed is actually making policy decisions for Europe because they're concerned about the growth or lack thereof, or indeed that Germany, as you mentioned, is the Bundesbank actually setting policy for the US? What kind of way?
Yeah, let's say that today we have really a different economic condition. I think that the Fed is very well ahead. They probably have been playing more pragmatic than any other central bank, and they are in the best situation. So I think that, on this sense, the Fed will act as it should act, independently from Europe. Europe is always a little bit like a small dog, we have to follow. So somehow we will have to adapt to the Fed policy, and of course the contrast in between politicians in Europe and the central bank. This will keep Europe in a more difficult situation. And of course, Germans and the Bundesbank are on one side, the rest of Europe in the other side. But at the end, I think that the solution is set. The question is the pace, but euro will be weaker. European interest rates will be low for a long time. Probably will have monetary, intervention by the BCE, and currency markets will reflect that by having a weaker euro and a stronger dollar over the next 12 to 18 months.
Indeed. Now, you mentioned also Asian currencies, to your mind, you believe are going to be a lot better off, a lot stronger than Latin American currencies. Now we have data from both necks of the wood, so to speak, this week, but what do you think will be the main drivers for these two different continents or currencies?
As I was saying, you know, Latin American countries are experiencing weakness, and I think that, you know, the strength of the dollar or a less accommodative policy from the Fed will affect them directly. I was talking about Mexico and about oil, which is the same for Venezuela. You know, if they have prices below $100, I mean, this affects directly their budget. So I think that this currency will be soft down the road. Instead, Asia is on the other side. Most of the currencies are more linked to the dollar than to other currencies. So I think that already by being this situation, they will take advantage against the other currencies. And then I think that the economic conditions in Asia are definitely better and will improve also thanks to the weakness in the oil prices. So I would rather really say my advice, it would be for the next few months to be long the dollar, buy the dollar on any corrections, and keep a long position in Asian currencies, maybe for example the Indian rupee against Latin American currencies. Without taking into consideration one currency that has been particularly weak, it's the Russian ruble, who has been suffering, you know, from sanction and now suffering from a weak oil price, so probably will continue to stay weak for the time to come.
Well, we see which currency you're supporting with your vote.
That's let's say my advice. That's my position, as we always say in our trades world. Let's put the money where our mouth is. Yeah. So that is a big show of my position today.
For sure, hearing it loud and clear. Well, Roberto, thank you so much for coming in and sharing your insights with us today.
Thank you, Monica. Always a pleasure to be here with you.
Indeed. Okay, well that's all from Roberto and myself. Hope you enjoyed this exclusive interview, and please do keep clicking back to Dukascopy TV for much more of the same. See you next time.